All right, welcome to another episode from the Chart Reader. So today is the day we were looking for, right? I threw a post on YouTube yesterday. I really wanted to make a video. I apologize, but I at least got the thought out, and really we saw a bit of it, right? What we were seeing was this ridiculous rejection on that 8 moving average. But now, all of a sudden, we're a little bit over it. All right. And look, I wanted to be more over it. There was a real nice moment when the wick was that high and it looked like a good, strong candle. That's a doji right there. Right. And we're still in this little bit of uncertainty right now. But clearly, this is the best we've done against the 8 moving average since we've lost it. And if we can, you break the 8 and you go to the 20, basically where I think that 200 moving average is, right? And if I'm not mistaken, roughly speaking, that's what I said yesterday, and ideally a gap over it, right? That's exactly the picture we put, right? We were tired of the rejection. Either we were going to make the move to fill that, or we were going to go under, right? So not quite the gap I wanted, right? We actually opened down here instead of where I wanted to open, was basically where we closed today, right? But let's see what it does, right? At the minimum, look, when the Nasdaq does even just a little bit well during a bad moment, stocks get happy and stocks can make a big move. All right, RR is something that was definitely discussed on the Discord earlier. I know I saw a couple posts today. Yeah, you could see it right at when market open, right? First hour, a little bit after, kept pushing, and yeah, I mean, it did really nicely, right? So we'll talk about this one. SOFI is an interesting one, and I think just looking outside of even the technicals, one interesting thing I'm seeing, and I mentioned it today, we're seeing a lot of stocks hit the 200 moving average and bounce off it, right? I didn't mention it on RR, but I know yeah, right there. We hit the 200, we bounce, and hey, this one's going a little bit better, right? Are we going to see SOFI kind of do the same thing? That's kind of something I'm looking at, right? But again, if NASDAQ can make that little fill that basically looks just like that little fill, hopefully we can get over the 8, go to the 20, and look, the candle's almost identical to what we just saw on NASDAQ, right? That same little struggle right there is an interesting, attempt right here on SOFI, right? And then last on the list is KULR. Can you guess what I'm about to say? Look, not as picturesque. And hey, maybe to some extent it does two things. Number one, it keeps magnifying and it keeps emphasizing the strength and the importance of that doji row right there, right? I'll talk about that shortly, right? But that is an important thing. And hey, maybe, and again, I think this is a little disrespectful to say to SOFI, right? Because I do think SOFI is a lot more, not even a little more, a lot more legitimate than KULR. But just looking at the technicals, hey, this one's actually a little bit stronger than the other two because it never even had to come to the 200. It was able to do that same bounce and go, a little bit higher, right? I'm not here pretending I know the math of these, let alone, but like, yeah, that's what, the 170 average, maybe, if I had to guess. It's not quite in the middle of the two, but yeah, it's at least above the 200. And again, to me, just looking at the lines on its own, right, that's a bit of strength right there, right? But I think I would focus more on that doji moment. We're actually over the 8 and the 20 on this one, right? But yeah, that's not the strongest of candles to confirm. But even from here to the next line up, there's still a good little more than 10% to be made, right? We're 25 cents away, and 17 cents is 10%, right? So not too bad across these three. Again, what really matters is what happens with the 8 moving average, right? Even on the stocks that we just looked at, we see it time and time again. You struggle with the 8, you kind of get over it, and then you just kind of keep struggling with, right? Obviously, the NASDAQ is significantly more important and stronger than RR, but these lines are what keeps everything, relatively, equal in our little technical eyes, right? And yeah, even a major market index is going to struggle with the lines until it doesn't, right? So at the minimum, I'm looking for a quick recovery. I am nowhere near thinking full sustained recovery until we're right back over at least the all 5 moving averages here, right? So, but there's nice channels to be made, and we'll be watching them. I'll be trying to take advantage of them, right? Otherwise, we'll see what the lines tell us and go from there, right? So, really excited for these three. There were some nice gains to be made for sure, but again, we're here keeping things realistic. As excited, look, I'll tell you, this is just the last thing before I get into it, and this is a little bit on the personal side. I remember myself before I really tightened up my rules. I would see these down markets, down markets, down markets, down markets. We literally went in the span of the market from 5 to 150. And I shouldn't say literally because it wasn't, no, it was literally. We were above it, right? We go from 5 to 150. It's really excited to get excited here and get overly excited. We can't get overly excited yet. What we're doing is attacking the dragon while it's sleeping before it wakes up and wins the battles every time, right? We're not in that perfect market. We're still like attack and go, attack and go, attack and go. But when the market sustains, we will clearly know, and that's where we'll be back to normal and more aggressive and whatever words you want to use, right? But we're here just taking advantage of the moments in my eyes. I might be wrong. Maybe we're doing a lot better than that, right? But that's just kind of what I'm expecting, okay? Before we do go any further, though, and I give you more of my thoughts and opinions, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how these things are setting up short term. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can, please subscribe to this channel. Share this video online with your friends. Comment good or bad if you disagree. Look, anything you can do helps so much with these YouTube algorithms. But for real, just being here, giving me your time, oh, I'm so grateful for it, all right? So looking at RR, I mean, what a lovely day. And I think my favorite part of it was just, like I said, being able to take advantage of it, right? What am I doing wrong? Come on. Oh my goodness, you would think I'd be better at some stuff. Again, we looked at it this morning. It actually kept going. And I mean, you can see the candle pretty much to the end with just a little baby wick up there, right? When you have so much red, you can see these green bursts. And again, NASDAQ didn't look as fantastic as this 32% would show. But again, there were moments where the NASDAQ candle was almost at 18,000 and it actually looked fairly strong, and it looked like it was ready to do its own red to green, right? So in my opinion, RR was able to really just take advantage of that early momentum, and it just never let go. You can basically see it on that hourly chart, right? It actually almost, I think I use that word almost loosely, right? It basically says I'm gonna break the 200 and confirm as well, right? That's a nice candle. That's a good confirmation behind it, right? RSI is a little high, and I'm not here for hourly charts, right? But to me, the importance with RR really was it took advantage of that good NASDAQ start. It took advantage of the big volume it got. It definitely never mimicked it in the next hours. But hey, the momentum was there, the channel was there, et cetera, right? You get over the 100 well, you're going to go to the 200, right? On the hourly, on the daily, on whatever, right? So RR, this is a beautiful example of finding good channels when the market tries to correct, right? Look, I'm hopefully going to cover a quant after this, right? But that was exactly what we were looking for with the quant stocks, right? QUBT. There were nice little gaps and nice little moves that from here to here was a good percentage, right? If we can go from down here to 6 something all the way to the next lines at 8 something, you're going to get big percentages, right? What was another one? QBTS. I think this was another one, right? Yeah, this one actually broke all and flew and actually went to the, like, what we're looking for are the stocks that have the good channels and I can't tell you how important this and is. And the indices need to make the same attempt, right? We really need to get to 17,900 tomorrow. That's rough. Honestly, I'd love to get all the way up there at 18.4, right? 18,040. To me, even just right there, get me a little bit over that red candle and get me nicely over that doji. I need to keep believing because again, that's just a doji right there, right? When we look at the S&P 500, exact same story, right? Maybe you can say that's a little bit more of a stronger candle. It's not really enough to make me believe that we've taken the 8 and we're ready to go on up, right? But yeah, if we can get to all the way up there, that's a good percentage. And it only takes a little baby percentage on these to bring a monster double digit on the silly little tickers we flip, right? So RR still has room for more. It really does. I think there's a real shot at this thing coming to 250. I think if it breaks 250, you can see where my next line is, right? And really, for me to think break 250, NASDAQ's going to need to do a lot more, right? If we start making our way all the way on up there, that's a big channel. And that could maybe do some interesting things for RR in all honesty, right? But for now, my expectation's 250. If we can get over 250, again, you can. I'll delete the line, right? But hopefully you see it. Red, 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 green, 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 red, 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 green, 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 red, 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 right? Like there's a really nice path, and I think I'm about to set an alert as I delete that line. Why not? 264? No, I'll come even call it 261. I'd like to know if 261 hit because from there to 470, that's a beautiful percentage, right? So watch what the Nasdaq does. Hopefully this can mimic. Look, I see the MACD and RSI looking nice. I'm not loving the overall market conditions, so I'm really ignoring a lot of these more than I normally do. Right now, I care more about the moving average spacing and what the index looks like. If I'm trading a tech stock, NASDAQ better look good, right? If I'm trading something in the middle, we'll talk about SOFI next, I need both S&P 500 and NASDAQ to do well. Maybe even sprinkle a little Dow Jones on that one since it's a bank, right? But these look nice for sure, right? I think the one thing I do like a little bit more is this 50 average volume, all right? Big volume during that big initial monster run brought us to a very unsustainable volume expectation, right? All of a sudden we've zoomed away from those. We're kind of coming back to reality. The line went from from like all the way up here to starting to make its decline down. Now we're getting a little closer to meeting that average expectation, right? And when volume is better compared to the average, and you've got some nice channels and you've got an index trying to recover, that's how you bring a 32% day, right? So again, let's see how this reacts to 250. If this was to come down, really, I would use the lines I have here, right? I could see this coming back to 208. Hopefully we don't lose 208. If we do, maybe we'll come back to like 190-ish, right? But the goal really is continue and go to 250, right? So honestly, I don't know if I really want to look at the weekly much. I think the one thing that I like is this actually lines up pretty well, right? If we can get over that last little bit on the daily, the weekly is also saying, hey, there's some good room. And hey, if we can get up to where we need it, right? Will also be nicely over the 8 and all the moving averages on the weekly, right? So to me, I'm looking at more of the lineup than anything because I don't think we can look at weekly charts much right now. I think it's very much day to day, NASDAQ to NASDAQ, candle to candle, right? So let me know your thoughts. Let me know your opinions, even if you disagree. Let's take a look at SOFI, all right? Real quick, hey, if you can subscribe, if you can share, oh, it does wonders with these algorithms, all right? So what are we looking at? Really, we're looking at almost the exact mirror of the indices here, right? When I look at NASDAQ, it's the post I put, it's what I just showed with RR. I just see the struggle with the 8 moving average since basically the end of February, right? Around the 20th, 21st of February until right now, right? When I look at the S&P 500 around that, not even around, the exact same candle, that 221, we're just struggling with the 8 moving average until we're trying to come up right now. SOFI is a mirror of both of that, right? We don't exactly lose it. Oh, wait, we do. That's the 21st right there again. Look at that. The 21st is under the 8 moving average. And again, we just start, struggling with the line, right? I mentioned it in the opening thoughts. I love the fact that I don't love it. Obviously, I want to stay over the lines, right? But I love the fact that when we're going to come all the way down, the last one does the job, right? I always say the 200 is the hardest to break up. It should be the hardest to lose down, right? And like it did, boom, you can see it. We basically, to the penny wicket, right? Just a little bit above it, use the line to propel, and it's able to just reflect what we saw on the 2 indices, right? As this hit, those hit, and so on and so forth, right? So we're just below the golden line. We're just below confirming the 8 moving average, right? Clearly, we got over it physically on Friday. You can see that we closed 5 cents over it. Clearly, we're still physically over it on this Monday close. But yeah, those two together, they're not making me believe we've broken it, right? So hopefully we can get over 245 and make our way all the way up to 345. Not quite a 10% move, but just under, right? A $1.20 would be it. We're adding basically a $1.10 right there, so pretty close to 10%. And again, if we can get over that line, there's a pretty good channel all the way up to 416, give or take, right? So last thing I want to do is lose 1185, right? I'm just expecting this actually might even start to plateau now that we've had a couple good days on the way up, right? So maybe we'll even flatten there, but yeah, I think just don't lose. I almost said two. My goodness, 1185. We don't want to lose 1185. Again, I'm kind of ignoring the MACD and the RSI. I don't know if you just fast forwarded or watch RR, but I would look at these two lower indicators in a better market. Right now, all I really care about is moving averages, volume, and the indices. I need the indices to do well. I can't keep repeating that over and over, right? But if those continue on up, this should continue on up as well. And hopefully we'll start doing better than just the average volume. But I'm glad we're at least basically living there instead of completely missing it, right? So it's really important that NASDAQ continues. Let me just flash it real quick just in case you fast forwarded, right? We need NASDAQ to continue. We need it to take that red, red, red into a good green, green, green. We need the S&P 500 to basically do the same. I'm obviously a little annoyed that the 200 is lower, right? There's a nicer distance on the NASDAQ as opposed to just from here to here on the S&P. So that's a little bothersome to me, but hey, maybe this can just get over it a little bit quicker, right? And some things could come. But yeah, that S&P moving average channel is not as pretty as the NASDAQ, but keep them both on your radar when you're looking at something kind of in the middle, right? This is brick and mortar bank as well as this I'm a technology, sector thing, right? So again, I'm not looking at the weekly too much. To me, this is more day to day and NASDAQ candle to NASDAQ candle. But what I do like is, hey, if we can get over the golden line, the weekly saying 14, that's actually what we were saying on the daily, right? So let's see how we can react to that 20 moving average first. But yeah, I think having a 1350 target for now isn't, excuse me, is not unrealistic, not unrealistic. Is that double negative? I think that's a realistic target. Let's just keep it simple, right? So let me know your thoughts. Let me know your opinions. Even if you disagree, hey, let's end it with KULR. And look, again, I think it's a little disrespectful to say it to SOFI versus KULR, but hey, when we're just looking at the lines, right, just looking at the moving averages, this never needed the 200, right? We started with RR. RR actually hit the 200 and goes. We then went to SOFI, which just barely missed it, but basically does the same wick and go, right? KULR is significantly over the 200. And as a guy that likes lines and as a guy that tries to use the lines to make all things equal, regardless of what you do, what you sell, what industry, how much you're worth, et cetera, hey, there's some strength to say there, right? The other thing is that I love that it marries with this doji moment, all right? And I'm not covering SoundHound on this one, but I very often was comparing this to SoundHound, right? There were critical doji moments right there. There was another critical doji moment right there, and you can see the first one was a big bounce. The second one was just this wildly long horizontal. You can actually almost argue we saw a second and a third bounce from this one, right? But eventually, once you broke both doji lines, that's when good things happen, right? So far, what I'm seeing is this initial doji line doing the same thing. It's holding, taking us back to up here. Let's see how we react to this second one, right? So those are kind of the big highlights there. Real quick, hey, if you can subscribe, if you can share, it does big things with the algorithms. The one other bit of strength that I like is actually the 50 average volume. All right, so again, with those other ones, RR got really close to it, the closest it's been, but definitely didn't get over it, right? With SOFI, good, definitely really close to it, but yeah, definitely not over it. I still see some white on top of that green candle, right? KULR, I don't need to zoom in that much, right? And in fact, those were kind of the last couple of trading days, right? That was the Thursday, Friday story here, right? So this has actually had a little bit better volume than the other ones. And hey, just like I said with RR, there's still some room here. Excuse me. I think there's a real good shot at $2 because I'm seeing a lot of red, red, red that we can take to green, green, green. And hey, if we can get over that two, maybe we can go all the way on up to that 366, right? I think it's very, very aggressive to think 366 right now. So just please keep things in check, right? But if we can get over that 204, again, to me, that's basically that doji line, right? And again, we saw it with Soundhound. It was momentarily. Sorry, let me zoom out and then zoom in just in case because I know I was a little far from it. So with Soundhound, okay, so okay, with Soundhound, this was the first one, and then this longer one was the second one, right? You can maybe say there was a little bit ones right here, but obviously in retrospect, we knew it was this one, right? So this first one, we go, we lose it, right? Green, 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 red, red, red. It happens to everyone. This holds and we go. We then make that long, long doji line that we have exactly on KULR, right? From there, you can see there is a second fall, but what I really wanted to show was when we were able to get over this one and this one, we actually got a nice little pop after that as well. All right. Again, Soundhound and KULR are not the same things. Hopefully that made sense. Throw some questions in the comments. But that's what I'm looking for. We've now used this first doji to bounce. It looks like we're going to take it to the next doji line, which is actually marrying with the 50 moving average, which is perfect, right? Maybe we can get another little pop up just like we saw in Soundhound, right? So for now, the immediate target is 206. I'm going to set an alert for, let's call it 208. Why not? A couple cents above it. Let me know if that breaks and we'll take it on up there, right? Again, I keep repeating this. I'm kind of ignoring the MACD and the RSI. I know it looks good, right? I see that green over red divergence, right? But to me, it's still a little choppier than a guy like me who's more of a swing trader than a day trader wants, right? I need markets to be good, calm, and stable before I'm looking at silly little indicators to decide between silly little tickers, you know what I mean? So as long as the moving averages look good, as long as volume looks good, and as long as the index does what it needs to do, right? This one I would say just look at NASDAQ, right? If NASDAQ can do well, this is deep in the technology world, and I think that alone is what it needs. But yeah, I think that's a decent thought there. Ooh, am I frozen? I'm a little frozen. All right, it doesn't want me to look at the weekly, so we're just going to end it here, I guess. So let me know your thoughts. Let me know your opinions, even if you disagree. Oh, I appreciate you so, so much.